The last thing I saw was showing day on day, ETFs are actually buying more and more. And this is not surprising to us. I mean, there's a bunch of RIA money. There's trillions, somewhere between 40 and 100 trillion of RIA money that could not access Bitcoin before. I mean, they could if they were going to buy GBTC, but that was a little too esoteric for people to do it. So as a result, they what they did was they sat on their hands, and now, of course, they can buy it. And so they're starting to slowly but surely educate their clients.
Hey guys, welcome back to Everyday Finance. In this video, Larry Lepard discusses about Bitcoin and crypto. According to Larry Lepard's final observation was that ETFs were consistently increasing their purchases. This doesn't come as a shock to us. He's referring to a significant amount of money, amounting to trillions. There is a significant amount of money in retirement accounts that previously could not be invested in Bitcoin, but now they have the opportunity to do so, considering purchasing GBTC. But it seemed too complex for many individuals to proceed with, leading to some uncertainty about what to do next. They were hesitant to spend their money at first, but now they are able to make purchases and are beginning to do so gradually. It's important to note that the 9 ETFs currently hold 1% of the total available Bitcoin, which amounts to 210,000. What does it mean when Larry Lepard buys 1% of something? When the ETF was announced, the price was around 38 to 40. They purchased 1% of it, causing the price to increase by $10. Wow, that's really impressive. What happens next? Will continue to persist, they will continue to arrive, and the wealthy investors are likely to purchase it, and lots of things Larry Lepard discussed, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
Well, I think you and I both know the long-term play. The long-term play is to own financial assets that can't be printed, and the two, the best financial asset that can't be printed is Bitcoin, and the best physical asset that can't be printed is gold and or silver, because the government can't, make more of them by decree. So it's a mess. That's not a fax machine, actually. That's a scanner. Fax machine is long gone. It's unclear. It's unclear what the next stage is, but it's very clear what the longer term stage is. And I say unclear what the next stage is because they're very good at putting putting these back in the can. Silicon Valley Bank blew up. They figured it out and put it back in the can. They've got a lot of different tools to lie to us and fool us and prevent people from doing what they need to do. And to keep them, quote unquote, in the system. And by the way, they're trying to strengthen those tools. I mean, Elizabeth Warren is trying to tell us we can't self-custody and, et cetera, et cetera. So, and yet, if we're intelligent citizens, what we've got to do is we've got to realize that the government is a criminal enterprise and that, we need to take countermeasures. And frankly, Bitcoin is the best countermeasure ever invented. And, as my friend Chris Iron says, it's a slippery fish. The government can't hang on to it. I love that statement because it really is. If you've got your 12 words, good luck, government, taxing it, getting a hold of it, stealing it, whatever, debasing it. None of those things are going to happen. And, it's showing up in the price right now. I mean, this is a pleasant surprise. I mean, I thought the price would go up this year. I had no idea we'd get to this level, even before the halving had hit. So, I have great hopes for what might happen after the halving, right?
According to Larry Lepard, investing in financial assets that cannot be printed is a long-term strategy, with two top choices. Bitcoin is a digital asset that cannot be printed, while gold and silver are physical assets that also cannot be printed, since the government cannot create more of them through official orders. The situation is chaotic and not easily resolved. The scanner and fax machine are no longer available, and it's uncertain what the next step will be. It is evident what the long-term plan is, but Larry Lepard finds it uncertain what the following stage entails due to their proficiency. Larry Lepard from Silicon Valley Bank discovered a solution to the problem. Return it to the container. There are various tools used to deceive and manipulate us, hindering individuals from taking necessary actions and ensuring they remain within the established system. They are attempting to enhance those tools. Larry means Elizabeth Warren are suggesting that we cannot self-custody and so on. As intelligent citizens, we must acknowledge that the government functions as a criminal enterprise. We must take countermeasures, and Bitcoin is truly the best solution ever created. Let's back to the Larry Lepard interview.
Since I'm off of Twitter now, I don't get as much flow out of there, but Fred Krueger has done a great job on Twitter of, keeping track, and it's actually accelerating. I mean, the last thing I saw, it was showing day on day, ETFs are actually buying more and more. And this is not surprising to us. I mean, there's a bunch of RIA, there's, trillions, somewhere between 40 and 100 trillion of RIA money that could not access Bitcoin before. I mean, they could if they were going to buy GBTC, but that was a little too esoteric for people to do it. So as a result, they what they did was they sat on their hands, and now, of course, they can buy it. And so they're starting to slowly but surely educate their clients. Yeah, I love this chart. Isn't this great? I just love it. Right?
Thousands. You know that BlackRock hit 100. They're about to hit 100,000 Bitcoin. You know how long it took MicroStrategy to do that?
Yeah. Oh, I know. Right. Exactly. I mean, well, and here's the other thing that's very interesting to me. I mean, I saw a great tweet the other day that said something along the lines of, the ETFs, the 9 ETFs now own 1% of, the total available Bitcoin outstanding. And it was 210,000, right? And, gosh, I mean, in that buying of 1%, what do we go, before the ETF was announced, where were we, 38, 40-ish? I mean, they bought 1%, and it shoved it up, 10 grand. I mean, that's impressive, right? So what happens, and they're just going to keep coming. They're just going to keep coming. So, and I mean, the sovereign wealth guys are going to buy it. I went to Dubai about a week or two ago for this thing called Satoshi's Roundtable, which was interesting, although there were a lot of shitcoiners there. But there are also a lot of wealthy Arab, oil-related guys there. And, wait until these guys really figure out that this is better than gold. I mean, some of them have. But, I mean, there's just so many big pools of money. And once there's just not enough of this stuff to go around. And so I'm beginning to think Samson's, maybe he's onto something here. I mean, maybe we do go to $1 million on this run. I certainly, 100,000 feels like a no-brainer. And I don't know. I mean, is it 2, 3, 4? I mean, who knows? But all I know is I'm really glad I got the coins I've got, and I'm not selling any of them, not right here, right now. And I'm not sure I'll ever sell any of them, but I need a significantly higher price. I mean, significantly higher to pry a few out of my hands. Big concern. I mean, I'll give you my view on this whole, paper Bitcoin argument. Okay. I mean, and I see extremists on one side. I see people who say, look, we can see it all on chain, and there's absolutely no way there can ever be paper Bitcoin. Those people are wrong. There are a lot of futures. There will be more futures and derivative contracts, et cetera, et cetera. And, any contract that impacts the market price, or that relates to buying and selling can impact the market price. So, so it's not as simple as there won't ever be paper manipulation. But having said that, it's a lot harder to manipulate this stuff than it is gold. And that's because, one, the paper markets and gold are a lot bigger and a lot deeper. Two, the GLD ETF, when it came out, they were allowed to do a lot of funny things like have counterparties and buy futures and sell futures. And, GLD, for all you know, has bought gold from the future Lehman Brothers that claims they have the gold, but they don't have it. So GLD became a mechanism for creating paper gold, in my opinion. I read the prospectuses, a couple of them anyway, not all 9, on these particular ETFs. And what I think happened is that they're much tighter, and they, so I think that Fidelity, particularly, who I trust, they're going to be audited. And so they're going to have to show the coins they've bought. They're going to have to show those addresses. And so it's going to be harder, for people to play games here. But to think that they're not going to play games, I think that's naive. I think that, you look at a group like BlackRock, you look at Wall Street and how they operate. There's always the potential, if there is a way to rehypothecate or to create paper claims, they will do it. And, having said that, at the sovereign level, I think in the gold market, one of the things that happened is that there was a lot of paper being created through the Caymans. And I think it was the BIS and the central banks were actually doing it at critical points to try and hold the gold price down, because they knew that the gold price was the canary for monetary debasement. And so but those sovereigns could take unlimited losses, right? So those unlimited losses, it didn't matter. They could print the difference. But gold never went up 5x in 18 months the way Bitcoin has, and so this is going to be a much harder thing to mess with. But I think to assume that they cannot or will not try to mess with it is naive. I think that Wall Street operates, on a criminal basis, and so there's always the possibility that they will try to mess with it. And whether they'll be successful or not is unclear. But I think it's clearly an issue. I think Caitlin agrees with me on that. I mean, she thinks that there's some chance some GSIB's going to get out over their skis on this thing, messing with it and blow up. I don't know if I'd go that far, but I do know that if you go and you look at the futures market, futures and derivatives market for Bitcoin, and I'm drawing a blank on the name of the company that keeps track of all the chain analytics, but it's one of the really good ones. They'll show you how you can get their charts. They'll show you how it's growing. Well, I mean, just most simply, it's paper Bitcoin is like let's just use a really easy example that we can all relate to. We all know Sam Bankman-Fried ran FTX. There were FTX customers who thought they were buying Bitcoin. They had an account at FTX with US dollars in it, and they said, okay, I want to buy a Bitcoin. Fine. So they took, whatever the money was at that time, 20 grand, said, buy me a Bitcoin. And Sam said, yep, okay, fine. You got a Bitcoin in your account. Sam never went on chain and bought the Bitcoin. So that's paper Bitcoin. So that was legitimate dollar-based demand for Bitcoin that got made at FTX. And FTX just created an account entry, like a bank, and said, oh yeah, you own a Bitcoin now. And so all they were really doing was, and of course, they weren't going to screw that guy. If Bitcoin went up and the guy sold it, they were going to give him the gain, the dollar gain. But they didn't hold the underlying. You know what I mean? They did not hold the underlying. And that's paper Bitcoin. That's what I'm talking about, where somebody, the price ought to be set by balancing the supply and demand, right? And so, if somebody takes in dollars, real dollars, and says they're selling you Bitcoin, but doesn't actually have the Bitcoin they sold you, they just sold you a claim on Bitcoin. And this is why, it's not your, not your keys, not your cheese, right? Then they've sold you paper Bitcoin and they've suppressed the price because your dollars sent in should have been part of, they should have had to try and compete for an on-chain coin, and they didn't. And so that's really how price suppression works.
Larry Lepard observed those who assert, look, we can see everything on chain, and there's no way in those who claim that there will never be paper. Bitcoin are mistaken. There are now several futures, and there will be more in. You are aware of derivative contracts, etc., and you're aware of any deal that affects the market price, that has to do with purchasing and selling can affect the going rate. So thus, it's not as easy as, say, stating that there would never be any paper manipulation. Having said that, though, it's much more difficult to manipulate this material than gold because of the paper markets. And gold are larger and more substantial than the GLD ETF. So when it was released, they were permitted to do a lot of amusing having counterparties, purchasing and selling futures, and knowing that they could GLD for everything purchased gold from the prospective Lehman brothers, who assert to possess it, but in reality do not. Hence there is GLD, became a method of producing paper gold, if Larry Lepard had perused the prospectuses more than once, all 9 on these specific ETFs, and he believes that a much tighter fit resulted. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.